What is up, team? It's Chuck with Traders War Room, and we are back at you with another video bringing you the best trading platform. And this is your Sunday Motivator. Guys, check all that we have to offer right here at traderswarroom.com. Without further ado, remember, we look at the stock market like a war zone, stocks and sector. Those are our battles. We do it together as a team. We're attacking, we're conquering, we're destroying, and we're always going to war. And if that's something that you can get down with, then all I got to say to you is follow me and let's go to war together. Traders War Room, let's get it. All right, before we get started, we're going to go ahead and check on recent alerts. Team, while other people were losing money last week, TWR was winning, and it's just based on our consistency and just how we attack the market. So let's take a look at some of the alerts that we pushed last week and how they ended up on Friday. SPY 380 put. We entered originally at 115, and after we averaged down aggressively after a big push, we ended up closing it out at on Friday for the double up, guys. And that's a fantastic trade right there. And it's just staying disciplined and consistent with the strategy. Apple went ahead and averaged down a little bit in this one too. Entry was 170. After average down, we went ahead and got our average at 160, and it ended up paying up big, guys, right there. That's another 2x right there, closing out on Friday for Apple. Adobe, this one was crazy. This was a super risky trade. It was based on earnings, but the sentiment was extremely bearish, and we went ahead and rode this one, and this was another one. This was almost a 3x, guys. Adobe entered 130, ended up pulling out at 315. That's profit. Amazon 120 put. Again, you'll notice all of the big tickers, the SPY, all the tech stuff, when it had its surge, we had to average down a little bit, entered at 158. After we averaged down a little bit, we got our price at 109, and we were able to get out at 275 for the double up. And we did a calendar spread. So we went ahead and did a short leg of charge point at 19 put, 23 September. And we went ahead and did a longer trade on this one for charge point at a $20 call for 21 October. We were able to close out at the short put at 19, entered at 68, ended up closing out at 145. That was a fantastic trade. And we still got the long call option open on this one. And Google 103 put, entered at 128, and we rode this thing to the sunset, guys. We ended up coming out all out at 3 per contract, and that was a fantastic trade. So congrats for anyone that followed those alerts. And team, these are just my alerts. I have 25 others on my platforms doing their thing just like me every day the market's open. We had averaged down a bit more than usual due to some surge in the marketplace, but we stayed consistent and disciplined in the end, and it paid out big. And on that surfer, go ahead and take a look at what we got, man. We got all sorts of things, all the live trading, all the premium information. We got the data quant, we got the trading algos, we got watch lists and in-depth reports, and all of the alerts, guys, all of these. We got the day alerts. We got the swing alerts. We got small account alerts. We got something truly for everyone. Look at that. We got spreads and leaps. We got regular stocks. We got crypto, Forex, and we even got some futures going on. Something truly for everyone, and tons of just signals from influential people, plus the Research and Learning Center. Guys, if you can't find it on Traders War Room, you can't find anyone else. Truly something for everyone, every style and every type of budget. So you want consistent winners with truly something for everyone? All you got to do is join TWR and come trade with the bulls. Check us out right there at traderswarroom.com. And without further ado, let's go ahead and get into the main presentation. So what's hot and what's not? Basically, here's how your markets closed on Friday. We were red across the board. There were some glimpses of some pops where we kind of fluctuated between the green, but we ended up red across all the main sectors. Here's a picture representation of how the market closed. You can definitely see it was kind of, 50-50, and it was a tough battle, but the Bears ended up winning on the day. And here's your futures. We're looking like we're green across the board, except for the US 10-year. But I want you guys to remember, we look at futures as a glimpse into what could be, not what will be. So we use it as a strategy. And truly, once the bell rings, that's what gives us our trades for the momentum that we decide to go following the sentiment and the big money flow. Here's your indexes or your sectors performances. Guys, consumer staples was green, with energy, industrials, and materials being the huge losers. Dark pools, of course, we got the SPYs, the Qs, and all the big boys with some of the dark pool monies. And when we look at the calls versus puts ratio, we're seeing a little bit of a bullish sentiment in the call side of the house. But I want you guys to understand that we saw this the other day when we had the huge surge in the market midweek last week. We saw a whole bunch of bear sided of the calls versus puts, and it ended up just surging, guys. So just paying attention to this. We take this again is just a strategy so that we can have a plan for action once that bell rings. Here's your top winners of last week. A lot of these did very, very well. We're in an AAOI trade that we're looking to potentially come out here at the bell on Monday, and we'll take a look at some of the other ones. Drug has been on the radar for a while. AXDX has been a good one as well. Some of these pennies are doing very well. So we follow the momentum on penny trades, and we're just, taking the wins as they come. Some of your losers, again, some of these were, what we like about these losers are that they give us opportunities from a bottom perspective. Now, a lot of these do not have the fundamentals that really give us a great warm fuzzy for long positions, but some of them that are trending to the downside, but still are underlining have great fundamentals. This might be a good opportunity to go ahead and get into positions, or at least look for potential entries into positions for riding some rejection from the bottom. Most volatile stocks. Again, we got some of these have been volatile for a while, so we're seeing a lot of this. One of them that I really like is I'd like Enphase, ENPH. I like to trade that one based off of volatility. That's a good one to swing and trade off of bell volatility at the open. So you pick up the trades at the bell, at the ending bell, and then you swing that one over, and you usually get a decent little pop based off of momentum and the moving averages during a bell volatility. So that one's a good one. Netflix is another one we're paying attention to. A lot of sentiment and bullish sentiment with their advertising plan going in there. However, this one has been known to fluctuate very rapidly, both up and down. So we're paying attention to that, and it's a great day trading opportunity. And AVGO, so the communication sector has been struggling extremely hard. So we're definitely going to be paying attention to that one as we move forward. Most active stocks, NLY, you got your TQ, your SQ, of course, Apple, Amazon, and the big boys are all in there. And you got your semiconductor ETFs that have been popping a lot. So we'll definitely pay attention to those as the market continues to roll on this week. Here's your most active ETFs. You can see the ones that people are getting into. They're loving their leveraged Qs, and they like the SPY and the semiconductors. So those are the ones that are definitely pumping on big volume. Unusual activity. So of course you got AAOI, which definitely hit hard last week. That was unusual for that stock. And some of these other ones, what we like about unusual activity is this gives us glimpse into things that are trending, and whether it's trending on news or some sort of catalyst or just volume alone, still, if the trend is still present and we're able to follow the flow, we're able to end up making some money on some trades. So we do like unusual activity because it's usually a dramatic push one way or the other. And as long as we're smart with entries and exits, usually we can come out on the green side. Golden crosses. What we like about golden crosses is this is based off of moving average, where we got a short coming up above its long moving average, and usually has a great opportunity for continuation to the upside if you go out far enough. A lot of times when you see golden crosses, people tend to go too short-sighted on this one, and they end up getting ate out by theta and stuff like that. So you end up having to look for a little bit longer term. So we're looking at 2 weeks to a couple months before these actually start to mature. But these are usually good signals of continuation to the upside. And compared to that, you got your death crosses. Of course, this is the exact same thing, except for the opposite. This is going down. Same thing, continuation to the downside. But when we get death crosses, what we have to watch is we have to watch the rejection at the bottom, because a lot of times, especially if you get some that are good underlying fundamentals, you'll get a nice little dump because of overall market sentiment. And then you start to see a rally once it hits a support level, and then a rejection from the bottom. So we definitely pay attention to these because these are great opportunities, but you need to be careful with some of the death crosses that are underlying fundamentally strong. And a 52-week high. and your 52-week lows. And this is basically kind of the same thing like we're talking about. What we like about 52-week highs is if the companies have great catalysts and great news and great sentiment moving forward, usually you can start to see a breakout from a previous high level. However, if they're moving on just volume alone, normally what you'll see is you'll see what I like to call too much too soon, and you'll see the rush up and then the cool down because people are making money very rapidly and they're securing profits because the sentiment is not there for longevity in the particular thing. So that's what you got to wait for. The 52-week lows, again, we like this because this gives us opportunity to buy things on discount. NVDA is one that I'm expecting to probably see some pretty decent volume coming in, especially down at these prices. According to the sentiment that's still there, NVDA should continue to go down. However, it's very popular, and I could see it being very dramatic pushes with trading within a range of both highs and lows, and being able to be a great day trading opportunity for some people. All right, and so let's get into some news. So Volkswagen targets 75 billion euro valuation in a landmark Porsche IPO. People have been waiting for this for years. So Volkswagen is targeting a valuation of up to 75 billion euros for luxury sports car maker Porsche. Is said on Sunday that in Germany's second largest initial public offering in history. So this is huge news. Okay, so this will be interesting to see how this plays out, especially with the EV sector as well, because a lot of these want to go strictly EV, and Porsche would be a luxury type of EV brand if it goes successfully. Fossil fuel registry launched to help spot stranded assets. So Carbon Tracker and Global Energy Monitor said on Monday that it had launched the first global registry of oil and gas reserves, production and emissions with data for more than 50,000 fields. So this will be interesting to see what type of data that they bring as far as the fuel and the fossil fuel emissions is concerned. And finally, Asian stocks brace for a salvo of central bank hikes. So share markets idled in Asia on Monday as investors brace for a week littered with 13 central bank meetings that are certain to see borrowing costs rise across the globe and some risk of supersized hikes in the United States. So this will definitely something to watch, because while we have been, one of the more elevated interest rate hikes, Asia has been kind of cutting actually. And so it'll be interesting to see how this comes out and how this plays on a global spectrum. All right, so let's go ahead and get into some trending stocks and some charts. So here's your top 20 hottest trending stocks, and we got some of the charts here up in a moment on this particular sector. But what I want you to take from this is that we're seeing a lot of volume and pressure on specifically ETFs, and that's interesting because normally you don't see that much volume on ETFs. All right, going into the chart section, SPY. I wouldn't be surprised if we get a recovery rally from the dump, but I'm still standing firm in my assessment that SPY is going to continue to the downside, and I see us going in lower levels. I have a bet out there that we're going to see in the 350, 360s by mid-October. XLE, I believe we break down and out of this range from here, and we'll probably go test about 75, seems about right. We'll probably see a little bit of a rejection from down there because XLE is definitely popular, but we'll probably get the breakdown that we're looking for and continuation to the downside from here. XLF, I like this for a slow continuation. Volume is on the bull side, and banks are fair to do well during inflation times if done correct by the Fed. B&Q real estate is not doing that at all, and I think we go lower from this level. This sector will suffer from recession extremely, so I do think that we go lower from this level, and we have some room to go to the downside. So B&Q is one of the real estate ETFs that is in a high volume and a high watch category, and I think from this level we'll be going down to the downside. So definitely got this on my radar. Genome. So Genome Biotech being very speculative and will suffer from recession as well. And the monies that are normally put into research and development will not be there. And so a lot of these things that are speculative in nature. You know, we saw a lot of boom with the pharmaceuticals and the biotech. When the recession starts to really crunch in, all that research and development and stuff like that is going to get allocated to other things that are more present and pertinent to overall research and development for, you know, biotech and pharmaceuticals, stuff like that. So all the extra stuff is going to suffer, and a lot of these smaller companies will fade as well. TTWO. So this is an interesting stock, and I don't know much about this, but I'm just going straight off the chart. I like this. It's been trading in a tight range for a while, and I like this for a continuation and a breakout potentially. Now, I do think that we got some momentum to the downside, but I think around the 120 area, we might find some support and a bounce and rejection. And then I do like this for a breakout to above 130 on its way to 140 once it's able to reject from a recent in-range low and then reject up to the top, and watch out for the breakout. So I do like this one for long term. Costco. So this one is kind of 50-50. Any 50-50 I do, I put it in yellow or amber, whatever you want to call it. But this is breaking down. I believe that we see a push down on earnings this week. Now, this is risky because this likes to surge going into earnings, but I don't think we're going to do fairly well in earnings. I think it's an expensive stock. A lot of sentiment in these expensive stocks believe that these stocks are overvalued as current prices and that they have some room to come down. And I do think Costco is going to suffer from that. So I think while we probably will see a run into earnings, if we play our cards right on this one and we stay patient, we're able to catch the downside after earnings, pushing out, you know, a week, 2 weeks, even a month if possible. And with that said, here is your free trade alert, and this is running off sentiment from Costco. So we are going to look at Walmart. Okay, Walmart will follow Costco's trend, and we could very well see a run into earnings for Costco. But then after the earnings in Costco, I think, which will be fairly disappointing, I think Walmart will suffer as well. So I'm going to do put out a free trade alert. That's a trigger alert. So here's your Walmart trigger calls. We like calls that are above 134.50. Puts, we like them that are below 132. And the con type of idea is if we're getting into calls, we're going to go ahead and look for the 137.30 September, and puts, we're going to look at the 130.30 September. So we could go out further on the contracts as well, but this is what I'll be looking at when the market opens tomorrow and pushing into this next week. So this will be the 11th trade. So far, we have 10 for 10 on the YouTube trades. So this is our 11th one, and I like this one for continuation where if our triggers are pulled. And remember, when the trigger's pulled, we want it to pull on a 5-minute is good, 15-minute chart is best. So those are what we like for the entry criteria. And here's your viewer's choice. So Microsoft. So I like Microsoft. I do as a company as a whole. I think this is a good price to get into for long positions. However, I do think that we got some downward tempo coming with it. So I'm always a buyer of Microsoft on dips. I do think that we go lower, and I think we see a breakdown below these current lower levels and into some new levels that we haven't seen since, you know, the last pandemic and the last breakdown in 2021. So I do think we go lower. So on positions, like I said, I'm always a buyer on some dips. However, if you're starting out a new position, you don't have a lower cost base, I would hold off on getting into new positions on this particular one. And I would be waiting for this to hit a nice bottom where we start to see the volume come back into the call side, where we can start to think about a rejection. And here's an important note. So the market is reacting kind of odd currently. So we're riding the momentum for trades. Now, trading is different than investing, okay? We're riding momentum for trades. Bullish sentiment, we're riding longs. Bearish sentiment, we're riding shorts. And the suggestion from me is right now to hold off on new long positions. So we want to wait for the bottom before we actually get in, because a lot of times we'll get in now and then we'll see it continue to go down, and we'll average down, it'll go down again, we'll average down. So if we want to get into some new long positions, hold off until we start to find out really the true sentiment of the bearish market is gone, and we start to see the recovery from the bearish market into a nice bullish recovery. All right, and that's it, team. Up next is some TWR products and services. So if you don't want to find out and see what Traders War Room has in store or what kind of products and services we have, I thank you guys for watching the video, but go ahead and stop now and check us out on the website or direct links that are in the description on this video. For the rest of you that want to continue to rock on, let's go ahead and get it. So TWR products and services, something for everyone in every style. Guys, we have everything from paid services, the real-time buy and sell alerts, live trading, bell to bell, pre-market analysis shows, one-on-one mentoring, trading classes, a fantastic community, you name it, we got something for everybody. If you want to find a home and have a community of like-minded investors, Traders War Room will welcome you with open arms. So definitely come check us out. You can get all of our links right there, and inside the description of this video, there's all the hyperlinks as well. So right here, guys, every time you think about whether you are doing well or not doing so well, or you need a little bit of guidance, or you're struggling, think of TWR, okay? We are here to assist you, okay? Whether it's developing skills, gaining confidence, receiving guidance, refining strategies, or basically just getting a pro perspective to explore new plans of attack. Book your session with Traders War Room. Allow us to help you, and every person that books a session receives a recorded copy so that you have a tool and a reference point to go off so that you can do great things with your trading and investing. Every battle needs a battle plan, and we want you to build yours with Traders War Room classes. We have fantastic variety of classes on every type of topic and subject you could think of, okay? Pro classes, high quality classes, and every class is $15 for about an hour to an hour and a half presentation on various topics. So go to the website right here, check out what we have in store, and once you purchase it, you can watch the video 24/7 right from the website, and you can get as many or as little as you want, but definitely our quality and content rivals that of the big boys, and our price is second to none, guys. So check out what we have to offer. Less noise, just alerts. If that's something that resonates with you, we got something for you, okay? Check out TWR's instant message alert plan, okay? Basically, we took the noise out of platforms. There was a lot of people that said, man, all these platforms I'm on is too aggressive. There's too many dings and pings. We got you covered, guys. We got two rooms. Basically, you got an alerts channel and you got an alerts lounge. And the alerts come through the channel, and in the lounge, you can network up with other people if you want to. If this is something that interests you because you are getting overwhelmed with the platform that you're on, or you just want a simpler way to get great alerts so that you can get idea generating trades so that you can hopefully make some money, definitely check us out. Go to those websites right there and check out this, and we got the hyperlink in the description. And finally, I want to talk about our formal course, guys. We have a 6-week long course that's 2 classes per week. This is about options trading fundamentals, and it is a fantastic course. We've had 2 courses so far. We're midway through our second course, and the feedback we're getting from the students is fantastic. Okay, we have a virtual classroom. We do this, like I said, it's 6 weeks long. It's 2 classes per week. We do them live via our business Zoom account, and we post the recordings on the virtual classroom so that even if you missed the class, just like regular education, right? You miss a class, we got you covered, okay? And you have direct access with all the students and the instructor as well. So definitely, if this is something that interests you, our next class is coming up in mid-October. And so get ready. And if you have any questions, you can go ahead and check out the website, or you can email us at traderswarroom@gmail.com. And all of our links for personal contact are right there in the description of this video. And with that said, guys, that is the end of the video. We want to thank you for coming along with us in a journey. We also want to remind you to quit wasting money that isn't making money. Join TWR today. Come trade with the bulls, guys. From all the staff at Traders War Room and our official battle buddy, Rocket, we want to say thank you, guys, and remind you that we look at the stock market like a war zone. Stocks and sector, those are our battles, and we're doing it together as a team. We want to attack. We want to conquer. We want to destroy, and we always want to go to war. If that's something that you can get down with, then all I got to say to you is follow me, and let's go to war together. Don't forget, check us out at traderswarroom.com. You have a great night. Let's go out there and make some money tomorrow.